Hey folks, Bob Desmond here over the Contrarian Trader, and welcome to our post-trade review of Netflix. We shorted Netflix last week. We opened up our position on the 26th of June, added to our position on the 27th of June, and closed out that position on the 28th of June for a little bit more than a 3.5% profit within a couple of trading days. So a nice swing trade. Before I get into the logic that we used, the strategy that we used to enter the trade, why we added, why we decided to book profits when we did. First, let me talk about a special that we're running. Rarely do I run specials, but there are two reasons why I'm running a special right now. One is that it's July 4th holiday. It's that time of the year. I love my country. It's given me a lot. It's given me the ability to do what I love to do, and that's this trade and talk to you folks. Two is that, honestly, the members area of the website and really the age of the website is getting old, and I believe in adding value. And when I don't believe I am providing the value that I should, then I need to offer terms to new members where they'll be interested in staying on during the reconstruction process of the new website, because when that gets launched, the new members area, the new website, they're going to be locked in at the silver membership is, I'm looking at my whiteboard, is a 40% discount, and the gold membership is a 50% discount. You're not going to see this anytime soon again. Also, when I launch the new website, I'm investing a lot of money. Prices have to go up. But if you take advantage of the discounted memberships today, actually it ends on the 5th, you will be locked in. But there are only certain amount of spots open. So you really need to act quickly, because I'm a boutique operation, especially the gold memberships. They're going to go fast because I do a lot of engagement. I review the symbols that you want me to review. That takes time. So I can only have X number of gold members in particular, okay? So act now. If you're watching this on YouTube, in the video description area right below, you'll see the discount codes. You'll also see up here a link to take you over to the checkout page. Use those discount codes and you'll get checked out, either 40% on silver, 50% on gold. Act quickly, limited space, and it ends on the 5th. So please act quickly. All right, let's get to it. Netflix. So whenever I enter a trade, I believe this is gospel. You must know where you are on not just let's call it a 5,000 foot view, meaning the intraday charts, whether it be an hourly, a 30-minute chart. You need to take a look at the battlefield, how that stock looks from a much higher level. I'm talking from a 20,000 foot view, meaning the weekly charts. Then you have to drill down, take a look at a 10,000 foot view, the daily charts. How does it look? And then make your determination, what are the probabilities of the trade working out in your direction? Now, this is especially important when you're shorting a stock. In the case of Netflix, you're looking at a stock that has been in a long-term uptrend for years now. It's a very strong stock, especially relative to the S&P 500. So if you're going to short this stock, you better have a god-darn good reason to go ahead and make that move, because the odds are against you. So looking at this weekly chart, why did I think that I had an edge over my competition? And my competition could be Goldman Sachs. It could be you. It could be anybody else that's long the shares. I'm willing to take the opposite side of that trade, a negative position. So in this case here, going into the trade, I knew this is this current week, right? This is last week when we executed our trade. I knew the prior week right here, we were leaning into the third standard deviation Bollinger Band, which I always like to say. I'll save you the technical jargon of what that means. We are not supposed to be there. And we sold off and sold off hard. Now, I mentioned earlier taking a look at a weekly chart is like looking at the chart from a 20,000 foot view. So let's take a look at it from a 30,000 foot view. Even better, right? So here you have it. This is the month of June. It is now July, so we have a new bar. The month of June, we saw selling into strength. So we knew that there were profit takers above. Also, we have RSI above 89. When I shorted it, you had RSI 90. So think about that. When you have a large cap stock, a momentum play that is trading with RSI at 90. So when you see sellers begin to move in, when you have no overhead supply, that means that you have profit taking that's beginning, and it's okay to take put that toe in the water to the short side, because in all probability you're going to get a pullback. So now let's drill down. We validated that we believed that we had profit takers and a stock that was extended on a monthly chart and on a weekly chart. Now let's drill down to a daily chart. So on a daily basis, it was only a few days ago where we had RSI above 86, and honestly, that doesn't impress me. On a large cap name, somewhat, but really, it doesn't impress me all that much. We could see RSI above 90 on a daily chart. So we did rally, we pulled back, and it's at that point in time where we saw the market begin to come under pressure. Now, keep in mind what's in the back of my head is that, well, I have RSI on a monthly chart at 90. The weekly chart last week, I had profit takers. So now I see more profit taking into the new trading week. So what we did is said this, okay, let's take a look at the 30-minute chart. And what looks like a good risk-reward entry point. So we saw that we had a rally on the 26th. And then, as we've been talking about a lot so far in this commentary, I look at these topping tails, these wicks, shadows, whatever you want to call them, cupcakes, it doesn't matter. All it means is that you have profit taking on the shares of Netflix, and that the path of least resistance may well soon change. And so as we saw the sellers come moving in, we opened up a short position at 399.28, and we did pull back. We closed weak on the session, and that was good for our short position. Now on the following day, after I had a nice long slumber and I felt good about myself, we had a profit on Netflix. That's great to the short side, good stuff. President Trump comes out and he sends out a tweet, and it sends the market ripping higher. So I wake up and we're losing money. We're down on the trade. So what I said was, okay, what we're going to do here is that we're not going to react to a tweet. We're not going to do it. The market is under pressure, and a tweet is not going to help that. So what we're going to do is we're going to sit back. We're going to use strategy, adopt a tactical approach to adding to our position. And with that calculation of where we would look to add, we would also say, okay, at the same time, where are we going to look to stop out of this trade? Even more importantly, right? It's critical that we know where we're going to stop out. So the shares rallied. It had a very strong morning. I said, members, let's just chill here. What we'll do is we will take our crayon out, connect these 2 points, the high on the 21st and the lower high, more importantly, on the 22nd. I connected those 2 points, the highs of those 2 days, and then I extrapolated down with the assumption being that we are in a downtrend, and that the probability of that downtrend resuming after we hit the upper band of resistance yet again was fairly good. So we shorted into the strength right at this resistance level. I think we're about 30 cents off of that resistance level. So it was a really good execution. And I mentioned earlier where we would want to stop out of the trade. And where we wanted to stop out of the trade was obviously if we rallied through this upper band of resistance, and of course, if we closed there, right? Because if we closed above this resistance level, danced around on top of it, did a retest, then we would have to say, you know what? First out, best out. We need to cut our losses here, move to the sidelines, because there's a strong probability that we're going to move higher because we have cleared resistance. And especially if the shares rally up and through 420.50 and then 423.21, you'd have your head ripped off because shorts are getting squeezed all over the place. So we don't want to get that far. We want to keep our losses very, very small, right? So we're right in adding to our position here. And then it was a matter of, okay, identifying where we would want to book our profits because the shares really just fell apart. Our basis cost on the shares were at 405.24. So we scored a 19.5 point profit on this one. And we booked profits right down here because what we were looking at on an intraday basis is very critical to identify your support levels, right? So we pulled back and we rallied off of support. Then we pulled back and we retested. That was the market sending you a signal that, okay, get ready because we're probably going to rally. And sure enough, we did pull back yet again. We held the 200 period moving average on a 30-minute chart. Once we began to break out, I said, that's it, we're out. We had too many indicators telling us that there were buyers moving in. They're going to rally the shares. Sure enough, they rallied the shares. And thank goodness that we booked our profits. So a nice trade. A bunch of you joined in. Congratulations on booking your profits. Now, what am I looking at for Netflix for the next couple of trading days? It had a very good close today. Let's go to the weekly chart. Let's do the multi-period chart thing and take a look at Netflix on a forward-looking basis. Now, remember that on a monthly basis, we're very extended, but that doesn't mean we can't stay extended, right? We need the market to send us a signal that the shares are broken, and they're not broken yet. So to think that we're going to get short, stay short, and the shares are going to get crushed, that's delusional, right? That's not the way we play this game, right? This is a business. It's not a game, and I use that word too loosely at times. So what we want to do is go to the weekly chart yet again. Take a look at how we're setting up on a weekly basis, and we sold off this morning and we reversed off of last week's lows. That is bullish stuff. Now it's only Monday, and plus it's an abbreviated week, so you really can't do much with the weekly chart right now, right? What you want to do is just take this snapshot in time right here, keep it here, okay? So far, the end of trade on Monday, it's looking good. Now we want to go to our daily chart, drill down. How do we look on a daily basis? We look pretty darn good, okay? We had a bullish key reversal. Notice how I was bearish last week. This week, I have a bullish tone, despite the fact that we have a monthly chart with RSI at 89. Why? I'm a capitalist. I don't get emotionally involved with these things. The charts are going to tell me which way the shares are going to go. My opinion means zero. And the minute I think that my opinion means anything, whether or not YouTube, their new paid service, is going to beat up Netflix, my opinion about that it means zero. What matters is money flow. What is the chart telling us about the shares of Netflix? And the way that Netflix closed today, they closed very, very strong. And that doesn't necessarily mean I'm going buying tomorrow, folks. Don't get that impression whatsoever. Volume is a problem. Take a look at this volume. There was no volume today. So we need to be careful on an abbreviated holiday week. What we do when we decide to open up a new position. How big do we want to get? Because we need to keep in mind how the markets are manipulated during an abbreviated holiday week. All the big traders have taken their jets out to Southampton Airport, and they're out there. What's in charge right now are the computers, algorithms. They're programmed right now to keep this market in check, not necessarily to break it out, and you don't have any institutional buying. So while the price action was good today on Netflix, the volume action was horrible. So if tomorrow, being Tuesday, I see that the shares break out and volume drops down, that's not my trade. I'm not going to be interested in it. Now, that being said, if the shares break out on rising up volume, well then, different story, I'll be interested in it. So all breakouts aren't created equal. Know the environment, know the, how do you put it? Know the matrix, right? The matrix was a manipulated environment, right? Know the matrix. Right now, we're in the matrix. The Wall Street is a matrix of computers. So right now, the matrix is saying, keep this market in check. Don't allow it to drop. Maybe it'll rally, maybe it won't. Okay? Next week, we'll know a lot better what direction this market's going to take. So if we do break out on rising up volume on Netflix, I would watch out for 423.21. Because as I always like to say, the test is always at the top. Do we break out or do we break down? Meaning, do we put in a lower high? Much as what you saw here on the 30-minute chart, right? This is a microcosm of what we see on a daily chart many times. It all begins on the intraday charts. So you have a double top here on a 30-minute chart. Does that carry through to the daily chart? Meaning, do we fail to take out the prior high, then roll over? Maybe. The markets will tell us. So we may buy the shares of Netflix on a breakout, assuming that volume rises, and we'll look for 423.21 to act as resistance. And my expectation is that it will stall there. Why? It's because that's where the sellers are. Because we know that's where the sellers are. Because remember what I put in the back of my mind only a short while ago? Remember the topping tails at the highs of not last week, but the week prior. Okay? I'm never going to forget that there were sellers, profit takers above. And neither should you. It's not just with Netflix, it's with any stock, commodity, ETF, the price of a cup of sugar, right? It doesn't matter. They can all be charted. They're all going to have profit takers at some point in time in the future. Watch your candlesticks. Those wicks on top of those candlesticks, topping tails, whatever you want to call them, it's a sign of selling pressure. Respect it, especially when you have a counter trend move, meaning how we rally today on light volume. That's not conviction, right? That could be short covering. So just be careful. And that's it for this post-trade review, folks. I hope you got some value out of it. Leave a comment below if you watch this on YouTube. Remember the special silver discount, 40% off, and gold discount, 50% off through the 5th of July. Take advantage of it quickly. Spots are going very, very fast. I sent out the first email notification this morning. Half of my spots are gone already. So act quickly. Everybody have a profitable trading day tomorrow. And happy 4th of July to everybody. Be well.